All right. The CME Group Executive Chairman and President Terry Duffy here with us on the fallout from all of that. I would imagine energy-related contracts are suddenly a big draw. Maybe not. What's the fallout from this? Normally, if a commodity of one sort goes up, other commodities follow. What do you think?
Hi, Neil. Well, first of all, let me welcome you back, and it's good to see you back, and I hope you're feeling good because you certainly look really great. So welcome back.
You guaranteed no tough questions now. Continue.
Neil, I think when you look at the price, especially what's going on in the Southeast, historically they have lower gas prices down there compared to what we have up here in the Midwest or in the East, just because of the location of the product. And then when you have a disruption, it doesn't surprise me one bit that we have a dislocation of price, especially coming off of a price, Neil, where we've seen, 3, 4, 5-year lows in the price of oil, and then all of a sudden you have a disruption. You're going to see a percentage jump that's probably a little bigger than you normally would.
I'm sorry, Terry, but is it a disproportionate reaction to the event in question, the Colonial Pipeline itself? I mean, it's not as if the thing was shut down permanently. You know what I mean?
Right. No, you're absolutely right, Neil, and it's hard to believe it's just associated with that, especially with the oil that we're getting out of this country alone over the last several years, and we continue to get out. There's no question there's a surplus of oil products around the world, and we're getting more here in the United States. So, it's just one of those things, and somebody asked me, why do you think this happened? I said, because they can, and that happens.
That's a very good answer, because it can. A lot of times we don't understand these wild swings and gyrations.
No, I know.
You do have this Federal Reserve meeting, and the betting is that the Fed is not going to raise interest rates because it doesn't see any inflation. But if the consensus is wrong, and then they do, then I would imagine these so-called inflation hedges or concerns would prompt a run-up in a lot of the stuff traded on the CME. Do you see that happening, or is it put off?
I think, Neil, if we do see a surprise today, yes, we will see some extreme volatility. The Fed has lended more volatility to the market than any other factor over the last several months. So if, in fact, they came out with a surprise, and I think it's, 80+% that they're not going to move. So if you do see even the smallest of basis point move, I think you'll see asset classes get, the volatility go up all over, because it's going to affect the dollar, which affects products, especially oil, which is priced in dollars. So you could see a huge spike in volatility if the Fed does throw a surprise today in the marketplace.
I also remember about a year ago, Terry, if my memory serves me right, when the Federal Reserve opted not to increase rates. It would do so later on, I think, in December. There was disappointment with that the Fed was somehow either falling behind the curve or was missing something or whatever. Is there a possibility of that type of reaction where the market begins to say, all right, this is getting kind of long in the tooth here. You're creating a bubble here. Inflation is out there. Look what's happening with this. And then it ensues panic.
Well, I do think, Neil, what's happening is you're looking at people looking more at corporate earnings and fundamental factors associated with global markets, not so much just what the Fed policy is going to be here in the United States or around the world. I mean, it's just we're at zero levels. I'm trying to figure out who they're going to incent to spend more money when people are already in debt as it is. Lower rates are supposed to stimulate the economies, but people are already in great debt in the United States and around the world. So, this is one of those things where I think the market eventually is just going to stop watching the Fed, have to look at corporate earnings, have to start looking at returns, and, consumer sentiment is going to be at the utmost on people's minds.
And maybe inflation on the road. Heaven forbid.
And maybe inflation, for sure, Neil. Yes.
Terry Duffy, thank you very much. The CME Group Executive Chairman and President.